more basic for you to understand. Firstly, in terms of the law, once a company registers, it's compelled within 21 days after the registration to register for payee. Payee is pay as you earn. That is the money that you deduct from the employees and pay it over to SARS. So some of you might find that you once worked before, and you know on your pay slip there will be the tax that has been deducted that is paid over to SARS. So that is the payee we're referring to. Now that you own a company, within 21 days, the law says you must register for payee. Only if you don't have employees yet, then you will not register, or if the company is still dormant, meaning you don't have yet an employee. So basically, in simple short, if you currently have a company now which you are paying employees and you're not registered for payee, already you're contravening the law in terms of the payee as far as possible, unless if such employees that you are paying are below the threshold, and of which we'll discuss at the later stage. But the registration is still mandatory, because there are other things that you might need to declare, such as UIF, which you can also be able to do it via SARS and SDL in terms of the SDL requirements. There's threshold as well that requires you to actually register for SDL once you reach certain salary brackets that are being paid to employees. Now that you know that if your company indeed is required to register for payee, we're now going to take it further, step further. In terms of the pay itself, what are the requirements? How does it work? It means the company on a monthly basis, you do your payroll, you pay salaries to your staff, you make deductions, and on the 7th of each and every month, you declare tax returns to SARS. But then, you now have directors who are also part of the organization. What does the law say? There was a regulation that was issued to amend fourth schedule January 2006. In the past, what the act said was directors are allowed to determine their revenue or remuneration that they've earned from the company at year end and do the declaration at year end. But that have since changed. Then the amendment, they said now directors are compelled on a monthly basis to deduct payee from any salaries, any remuneration that they're taking from the company and paid over to SARS. So what does that mean? If you're a director, you own a company, you are currently paying yourself 30,000, 20,000 a monthly basis, but there's nothing that you're declaring. It means you're contravening the act. And we're going to cover the issue of the risk. We'll cover the issue of how easy it is for SARS to be able to determine or know that your company is probably doing what it's not supposed to be doing. We're going to talk about that. But then in terms of what I just mentioned now, is that as you are aware, we know if you have a company that is probably making 100,000 a month or maybe $1 million a month and so on, you are obviously probably declaring your annual income tax. And when you declare annual income tax in terms of the law, you are required to submit the financial statements to SARS as part of the submissions. So what does that mean? That means SARS, when we did your annual income tax, SARS have your information of your financial statements. Chances are, even on your financial statements, you probably have indicated the director's salaries that you've declared on your detailed income statement or financial performance in terms of the new language that is being used. Secondly, your company is probably also doing VAT submissions. annual VAT submission is every 2 months. So let's assume annual VAT submissions, you are currently declaring 200,000 or R1,000,000 every 2 months. That obviously means your company is currently trading. And if it's currently trading, the question will be, are the people not earning salaries? Are the people just working for this company and making money for this company, but there's no one who's being paid salaries? That information also as well, it's already there, obviously for SARS to know, to be able to pick up the risk in terms of, are you complying or not complying? You also have a provisional tax. Provisional tax, I will not go much into it because those are just a 6-monthly declarations based on your estimate that you want to do. So let's put it in a very simple language. Your company is making money. Every 2 months you are declaring VAT. We talked about the issue of risk of the zero risk declaration on my last video. If you haven't seen that video, please go look for the video on our Instagram or YouTube under Kulugan Accountant. The issue of zero declaration on VAT while you are making taxable income or making money. There's a higher chances, 99% chances of you being picked up because of how the system now is structured. Look at that video, then with continuation on this conversation. I want to use a very simple example, a very simple scenario. You are currently declaring, I'm just continuing on the topic on the issue of the directors, pay directors. You submitting your VAT returns, probably last month VAT return was 600,000 that you declared. The following period is 1 million, the following period is 80,000, the other period is this and that. That information already, which is already sitting at SARS, it does not reconcile if now your pay is zeros, because you cannot be having activities that you are having through VAT, and at year end you are also submitting your financial statements through your declaration of income tax, but still you still don't have payee being declared. Now let's talk about the income tax. When you prepare financial statements, these are things that obviously we'll also talk to as well. One of the sessions I will take you through in terms of understanding of how do you read your financial statements as a business owner who does not have an accounting background. Your accountant will do the preparations and will show all the salaries. And another thing which I know it's a bit of risk, most companies, they will go look for finance for the house and finance for the cars. And one thing that the finance will ask is that the financials will need to see that the director's fees. I'm sure if you've once applied for a house or a car, you are familiar with what I'm really referring to, where they will need to see the director's fees on the financial statements, or they will need to have a confirmation of some sort from the accountant. So currently already your financials now is already indicating that there is a director's fees that the director has been earning. So the same information at year end, when you say, accountant, can you please file my returns? I'm non-compliant for 2019 or 2020. The accountant will take the financial statements, capture on the systems, and tells you this is how much you owe for the company. This is not for the personal. Then part of the submission, you need to upload the financials. The information already is there at SARS. So can you see that based on what I'm trying to say is that the information that indicate your non-compliance as a director, SARS have it. The only issues that SARS are having currently is the issue of capacity. When I say capacity, is that they are not able to look at each and every one in terms of the compliance. But however, when they come to you, then it will be something that it will be easy for them to be able to determine and nail you. So this is what I want every director to think and to do. And can engage if you already have an accountant, engage your accountants. Look at the issue of starting to comply. This is not what I say, this is the law. This is what SARS is saying. This is what the Act says. These are the informations that probably sometimes we don't talk about, hence we started these sessions to talk about the issues that I know are impacting our small businesses. Obviously, the big businesses, normally they will have their tax departments, they will have hired tax people that are sitting there and advising on a daily basis. So with your companies, we are here to assist. So I'm here to assist, to give you the knowledge in terms of what you need to know, what you don't need to know. You need to determine in terms of how much you're earning on a monthly basis. You need to start doing your payroll for your company, be it as a director. So if you're earning 20,000 to accountant, you must calculate how much 20,000 tax will be. If it's 3,000, then you need to be able to say, okay, on a monthly basis, the 3,000 rand, this is what I'll be paying over to SARS. And you do a payroll. It's very critical that you do a payroll, because if you don't do payroll, at the end, when you need to reconcile what you've been paid the whole year, it becomes difficult when you're doing your AMP 541 reconciliations. Otherwise, it means you will have to do the whole year payroll for you to be able to reconcile. But this is more of a technicality, which I don't want to bore you with details. But basically, what I'm trying to say is, you cannot go forever being a director of a company, and the company that is currently making money, which the money that we are currently declaring through VAT or through income tax or provisional tax, of which your employees are not being registered. You as director, you're also not registered in terms of for tax paying on a monthly basis. It's just the ticking bomb. Should SARS pick you up? It's not something that I'm saying, it's the law which requires every director of any company, small company, there's no exemptions. The small company, medium company, to be deducting taxes and paying it over. On our next conversation, we'll talk about the issue of annual income tax. I will also talk about other issues that impact you as a taxpayer, of which one biggest is the tax planning. But we'll talk about that on our next session.